there is a very vibrant IPO market, a lot of opportunities for one to look at, isn't it?
Well, yes, IPO market is indeed flooding currently, as a couple of them have already opened, some have opened today, and some are expected to open in this particular week. So this week, IPO action is full packed. So let's understand which are the companies that where the opportunities lies, how are the valuations stacking up, and we'll also get an expert take on that. And with this, let's go across to my colleague Sharad, who is joining us with all those details. So Sharad, firstly, take us through the list of IPOs that are in focus this week.
Well, almost 8 IPOs are something which we'll be discussing, and this is a lot primary market action happening.
So
of course,
you've been having busy week, isn't it? Week after week has been very busy for you.
We could say a busy month.
Yeah, exactly.
So many IPOs coming in, almost 40 mainboard IPOs we have been tracking. And just to put it in perspective, the second day of subscription, of course, yesterday there were 3 mainboard IPOs coming in. Motison Jewellers, 33 times it was subscribed. Muthoot Microfin, 95% at the end of day 1. And also Suraj Estate Developers, roughly 78% was subscribed on the first day itself. Now, of course, their numbers have increased over the last half an hour, and we will give you updated numbers as the day goes by. Also, 3 important mainboard IPO issues opening today. Happy Forgings, they raised around 303 crore rupees from anchor investors such as Fidelity. IPO prices ranging between 808 to 850 rupees per share. IPO size 1000 crore. RBZ Jewellers, 21 crore anchor raise coming in. It's a small IPO of roughly 100 odd crore rupees. While for Credo Brands Marketing, which is basically the brand having Mufti Jeans as its main customer, they are having 165 crore rupees of anchor investors coming in with the name of Morgan Stanley and family office such as Shubhkam Ventures. The IPO size is 550 crores and the IPO pricing that's ranging between 266 to 280 rupees.
All right, so those are the slew of IPOs actually that we are expecting today. But like you said, it's been a busy month. We have had a lot of IPOs, but given the fact that all these IPOs are coming, which one actually stacks better than the other? What are the valuations like? What is something that would make an investor go and invest in a particular counter that actually the IPO that is opening for subscriptions?
Well, it's a very interesting take. You keep on applying for a lot of IPOs, so a lot of fund gets blocked. So first of all, that also comes back to the investors, and now we'll just look at the valuations of the top 5 main board IPOs which we have picked up. And if you look at it, Happy Forgings is having almost a 25.2 times forward P ratio. That is roughly cheaper than its peers. If you look at Credo Brands and Motison Jewellers, that has also been relatively cheaper priced in the IPO from the merchant bankers. And on the higher side or slightly on the inline side, you could look at it, it's a big IPO coming in is Muthoot FinCorp, almost 1.7 times price to book ratio, and Suraj Estate, that is ranging between 30 to 35 times. So of course, a lot of options coming in for investors, but there is also one more take. There are 2 other IPOs also actually coming up, and that is something which we'll be also watching out for. The first one is being Azad Engineering. It's a company in aerospace component manufacturer. The IPO issue dates open from tomorrow. The IPO size is roughly 740 crore rupees, and the pricing is coming between 499 to 524. And even to keep us busy on Friday, we are having Innova CapTab. Over here also pharma companies dealing in CDMO and branded generics, and the IPO size is roughly 570 crore rupees.
All right, so those are the list of IPOs opening this week and how they stack up when you talk about the valuation, Sharad. And like you said, yes, it's been a very busy month given its year end, giving its festive season. I'm sure that those who are applying for these IPOs would not be able to shop, isn't it? Given the fact that every week you have so many IPOs and you're blocking funds for it, isn't it? But then I believe the fact that we've seen what a spectacular return Ireda has given, or even Tata Tech, for the matter of fact, must be actually tempting investors, isn't it?
Well, yes, it's very tempting, but there's a word of caution also. There's a lot of euphoria also in the markets. Right. So do consult your financial advisors, as well as, check your, pockets, how much you can allocate. And of course, keep some for your gifts and, year-end parties as well.
Absolutely. A word of caution coming in, a word of advice coming in from Sharad. Thank you so much, Sharad, for taking us through all of those crucial details. And if you're wondering which one stacks better than the other, let's ask our experts. Actually, we have Kunal Bothra as well as Rajesh Agarwal joining us on the show. Yes, Kunal will not be talking about the IPO market, but I will ask Rajesh. And Rajesh, yes, you have almost 8 of them this week, IPOs, and this month itself, what spectacular amount of actually listings also we've seen. What should investors do? Do you feel there's a euphoria in the IPO market? Like Shara said, you should be a bit cautious and think about where you're going to actually subscribe, or which one should you subscribe to? Or do you think you should just try your luck?
Good morning, Shail. Good morning, Srishti. Good morning, Kunal. You said it right. IPO market is hot. It's witnessing a surge in activity. I would say exuberance. 8 main board IPOs and 4 SME IPOs. That makes 12 IPOs in this week only. And the way things are moving on, I am a bit concerned about this because people are not looking at valuations or fundamentals or anything. What they are looking is every day they are calling for GMP, what the gray market premium, and they are going to subscribe to that. If the gray market premium is higher, they are subscribing it more. This is very dangerous, I would say, because just looking at GMP is not going to give you any direction where to invest and where not to invest, because gray market premiums are on various other parameters rather than on fundamentals. And the second one, which investors keenly look at, is anchor book. So if the anchor book is with big names, they go to subscribe. Uh, they don't think that whether the anchor is going to stay for a very long period of time, and what is your time horizon, what is their risk appetite, what is your risk appetite. These things are to be taken into concern. And the kind of figures which we are seeing in the number of subscription, 96 times oversubscribed, 93 times, if I'm not wrong, oversubscription in DOM, 61 times in Inox, and 33 times something like in India Shelter. And in SME, you have subscription ranging into 500 times, 400 times. That's sheer dangerous, I would say. People should be very cautious. Subscribe to only those issues which are very good on fundamentals. Even if you don't get listing gains, at least you can keep it them on in your portfolio. Nowadays, people are just subscribing to have listing gains. We have seen what happened in Ireda or Tata Technologies. So I would say be cautious. Don't look at GMPs, go for good quality names. As far as this week is concerned, I think Muthoot and Credo Marketing, which is a company for Mufti brand, are two better options out of these 8.
Okay, so that's the take coming in on the IPO world. A lot of opportunities there, but it feels like it's a bit of euphoria, and a word of caution coming in from Rajesh. And he also shared his topics in which Credo Brands is something that he's looking forward to. But Rajesh, let me ask you on Ireda. This particular IPO has seen blockbuster listing, and after the listing itself, the money has almost doubled. What's your take on the valuations as of now for Ireda? What sort of a growth potential do you see, and what should investors do? The ones who have already gotten good amount of profits in this one, any advice for them?
For a long term, it's a good stock to be into it. But for a short term or medium term, I think valuations are very stretched. Where yes, the fundamentals are good. They're into renewable energy financing and all. But look at the valuation of PFC and REC, which are almost comparable to Ireda. Yes, they are. Ireda is more into renewable energy, and PFC REC into a mix of that. But still, the valuation of PFC and REC is much cheaper than what Ireda is quoting at right this point of time. So anybody thinking of buying new stocks, I would say wait for some time, let things settle down, and then go ahead. PFC and REC are in a better position than Ireda on valuation parameters, although Ireda is also a good company for a long term. So if you're thinking of staying in the stock for maybe 2 years, 3 years down the line, well, Ireda can be bought at dips, not at this point of time.
So this is a note for all of our viewers. We kind of anticipated that we'll be getting this query because we've been getting day in and day out whether they should be actually investing in Ireda right now. And according to Rajesh, now is not the right time. But if you are looking to invest in this one for the long term, wait for dips. First, we have Kunal Bothra as well as Rajesh Agarwal on the show with us. A very good morning once again to both of you gentlemen. And let me take the first query to you, Rajesh. This one is coming in from our viewer Ashish, who's writing to us from Mumbai. And I don't know if you track this counter. It's Noida Tollbridge. He's bought this at a price of around 13 rupees, about 1,000 shares. He wants a fundamental view on this one. What's your view on the stock? He wants to know if there's anything wrong with the company fundamental, given that it's not been performing at all. I am not sure what made actually Ashish to invest in this particular counter. But if you track this one, Rajesh, what's your take on the fundamentals?
See, at one point of time, this was a very good company with on the Mayur VR side. They had a toll bridge and toll collections were too good. But after then, some regulatory issues cropped up and things went bad. And I don't think anything good has happened in this company and no point investing into this. It's better to exit this stock. The numbers also not that supportive. So I would say, why not exit and put this money to some other stocks?
Okay, moving on then, and Kunal, the next query is coming from B. Soumya, and he wants to take on two counters. Firstly is Vakrangi and the other one is IRB Infra. He actually wants a 3-month view on both of these stocks. Can he enter at this point in time, and good to hold for the next 3 months?
Well, not from a 3-month perspective. I think Vakrangi looks to be more of a high beta stock, and I would probably expect the stock to get into a correction sooner or later. IRB Infra, on the other hand, has gone through already a much stronger breakout. So I think closer to 30-32 was the big breakout point for IRB Infra. It's almost at 42-41 levels currently. So looking at the short-term prospects, the stock may just be at current levels, maybe 4-5% higher from current levels is what I would expect for these stocks broadly in terms of a range. So it's better to shift to some other stock in terms of potential returns, which could deliver much higher returns in that kind of a time frame.
All right, this one is all for you, Rajesh from Prathamesh, and he wants to know about Bharat Wire 700 shares at a price of 27 rupees per share. He wants to know whether he should stay put with this or look to book profits. If you advise hold, he has a time horizon of about 2 years that he can hold on to this counter.
See, not that kind of company which one holds for 2 years down the line, because at this point of time, whatever numbers were there had already been discounted in the price. Maximum, I think, on fundamental basis can go to 320, 325 odd rupees. So it's better to book part profit at this point of time.
Okay, Rajesh, the next query that I have, I beg your pardon, Kunal, let me take it from you because this one is from Behera from Cuttack, and he's a short-term investor actually. He wants to take on Devyani International holding 500 shares from a price of 183 rupees. What will be your advice on this?
So I think after today's move, the stock in the last 1 month of pattern indicates that it's just trying to consolidate at the 200-day moving average. Now there's one good thing is that the stock has recovered back about the 50 DMA today on closing base, hopefully on the current market price basis. So assuming the stock closes above this 190 mark, it could be a breakout. But the bigger concern for the stock which is happening is the possibility of a bearish crossover. So the 50 DMA is in line of breaking below the 200-day moving average for Devyani International. So which means that the stock needs to surpass the resistances quite quickly to try and mitigate this bearish crossover. Net, I would believe 200 could be a point where it may be an added degree of confidence if the stock crosses above the 200 levels, and even if it closes above those levels for a couple of days, we may expect a much more stronger breakout. So we may hold on with an anticipation, but 200 plus should be a key breakout point for Devyani International.
All right, this one is coming from Guru, and he wants a both fundamental and technical view on buying HFCL. Firstly, let me come to you, Rajesh. Fundamentally, does it make sense to go ahead and buy HFCL right now? Because we've seen this particular stock, it does rise on a news piece, but then from there on, the stock actually either dips or consolidates.
See, HFCL has a history of all sorts, from 2,500 odd rupees to 2-3 rupees, and now. So I think fundamentally one should avoid this stock. Yes, there were news of Reliance taking over some stakes, some 5G orders and all those things, but they are all priced into the stock. And any correction in the market, any meaningful correction would take a toll on stocks like HFCL. So if you're in a profit, book at least partial profit and not to buy at this point of time. If you're willing to buy, let it settle around 65, 68 odd levels, then you can think of buying.
So for all of those who have a query on HFCL and who are thinking about buying right now, Rajesh is of the view that fundamentally doesn't warrant one, but if you really want to, then maybe around 60, 66 or rupees you can, and if you're already in profit, then book out profits from HFCL. But Kunal, what's your take coming on HFCL? Do you concur with Rajesh's fundamental take on this?
See, I think broadly, yes. So the stock is very high beta, volatile, and it tends to move into very erratic phases of price trends. But then, when I look at the charts and specifically the long-term charts for HFCL, especially the last two and a half odd years, the stock has gone through a major time-wise consolidation, which means that it's now getting ready for a breakout, and it's not been one of the more participatory stocks in terms of the mid caps and small caps, how the stocks have behaved, or how the indices have behaved in the last 6 odd months. We've seen a phenomenal uptrend for the mid caps and small caps, and HFCL apparently has not participated. So I would probably expect purely in that aspect the stock to participate from here on, but keep it as a more shorter term trade and keep your risk parameters in line. I would expect maybe 1992 as a near term target for HFCL.
And the next query that I have is actually coming in from Leon. He's writing to us from Kerala. And Kunal, he wants a suggestion. Oh no, actually Rajesh, he wants a suggestion for mid cap or a small cap company which he can do a long term SIP in.
Your voice got muted.
Alright, am I audible now, Rajesh? I think we've got him on a patchy line. We'll just try and reconnect that line actually with Rajesh and try and ask him that query once again, because Leon wants a suggestion on a mid cap or a large cap stock that he can look for a long term SIP. Once we reconnect with Rajesh, we'll take the query to him. But Shrishti, you can go ahead.
Okay, moving on to the next query. And Kunal, I have a query coming from Sunny for you. Sunny is from Kolkata, and he wants any stocks that are on your radar where he could look at for a swing trade in these. So any of your top recommendations at this point?
So there are two stocks. One is Hindustan Copper. That's a stock which I think is looking attractive, about 200 levels. It's confirmed a breakout for itself, and this could probably be potentially a very strong breakout for Hindustan Copper. So you may consider this stock from current levels. Look out for targets in the range closer to 235 to 40 approximately, broadly as a medium-term target for the stock. And on the other hand, from the FMCG stocks, apparently it's Marico which has confirmed an inverted head and shoulder breakout, also a breakout of the 50-day moving average, now trading at 545.47 on the spot charts. Looks attractive for a trade from current levels. Swing targets of approximately 5% to 7% further from current levels.
All right, Rajesh, if we have you back then, just wanted your view on a mid cap or a small cap company which Leon can look at doing a long term SIP in.
See, as far as long-term SIP is concerned, I would suggest go for large cap names which have more potential, more less risky, I would say, and they can give you a CAGR return of 15%. So in the large cap space, I would recommend Reliance, HDFC Bank, Kotak Bank, and Larsen. But still, if you want to go for mid cap, I would say go for IRCTC, Salvi, or a Cochin Shipyard. These are some of the names which one can have a look upon for a medium to longer period, longer term horizon.
Okay, Kunal, the next query is on Hindustan Copper. This one is from Anu from Gurgaon, holding 500 shares of this one from a price of 190 rupees. Since the past 2 to 3 days, the stock is in momentum, showing good gains. Is this the right time to add more in this particular counter, and what's the medium to long term outlook?
Yeah, I'm bullish on the stock, and I think from current levels also I would believe that the stock looks attractive. In fact, it's just confirmed a breakout. So I think it's great that you've bought at lower levels of 190 approximately. The stock looks attractive in terms of a volume price breakout. So those classical ingredients which you look out for on the monthly, on the quarterly charts, the stock showing exceptional jump in terms of volumes, and the prices reciprocating the mood in terms of the short-term traders. So would suggest higher targets. So as I flagged off earlier, 235 to 240 could be kept as a 3-month odd, 6-month odd target range for Hindustan Copper.
All right, this one is coming to you, Rajesh. Debashish from Kolkata wants to know whether it's right time to buy Indigo for the long-term perspective. That's 3 to 5 years, considering the market share it has and also the boom in the Indian aviation industry. Do you think that Indigo makes sense to bet on it, given the fact that it is leader in the domestic aviation airline space? But let's not forget, you have a recent commentary of this today itself, SpiceJet saying that they have expressed their interest to actually go ahead and bid for Go First. Do you think that will actually kind of rattle or shake up things in the aviation sector?
See, first, SpiceJet's interest in Go Air, they might get, they might not get. If they get, I don't think that's going to do any shake up in the Indian aviation sector as such, because the leadership of Indigo is going to be there for some more time. Maybe unless some other big names come up, or maybe Air India tightens its belt. As far as valuations are concerned, I think the entire aviation pack, whether it is Indigo or SpiceJet or any other company for that matter, airline stocks, airlines are good for travel, not for investment. That's my view. Because in the longer term horizon, if you see the problems of crude oil, the problems of rentals, airport charges, and all those things are problem for these this kind of industry. We even sometimes below capacity running is also a big problem. So it's better not to go for a very long term horizon in stocks like Indigo. Very recently, it has come into black. Otherwise, the numbers were also in red for long period of time. I don't know till when it's going to be there. So it's better to have a short term view, have a trading view, not to have a long-term view in stocks in aviation sector as such.
Kunal, this one is from Reema and she wants targets on 3 stocks where she has holding in RBL Bank, 180 shares at a price of 219 rupees. She's been holding IRCTC from a price of 730 rupees and she also has Aditya Birla Sun Life AMC from a price of 412. So what's the outlook in all these stocks?
So RBL Bank, now it depends on the time frame, and my broadly assumption is that your time frame which you're looking out for is at least 3 months further from current levels. So I would probably place a target of 315, 320 approximately for RBL Bank. For IRCTC, I think even yesterday I was recommending that 980 seems to be a much more stronger possibility target for IRCTC. So wouldn't be surprised for another 80 to 90 points upside from current levels of 900 approximately for the stock. And for Aditya Birla Sun Life AMC, the stock has just shown signs of a mild breakout. So looking at the intensity and the beta nature of the stock, would place a target closer to 500 odd for ABSL AMC.
Okay, the next query is coming from Sudarshana, writing to us from Bangalore, and she wants to know about if it's time right now or is it a correct time right now to invest in Cochin Shipyard as well as Mazagon Dock in order to play the defense sector theme for the longer term. So do you think now is the right time actually, Rajesh, to invest in these counters after the run up and the consolidation that most of these counters have actually witnessed over a period of time?
See, with the order books up flooded, they're getting new orders every day with the kind of focus of the government on Make in India, Atmanirbhar Bharat and all those things. I think these companies are going to do well in a longer period of time. Yes, they have run up quite a lot. Valuations are stretched. So that's one part. But as far as some of the stocks like Cochin Shipyard or a GRSC, I think there is still some scope left and one can go long on Cochin Shipyard.
Okay, moving on, and Rajesh, the next query is from Murli and he wants advice on PI Industries. The stock has been in focus on the back of a lot of news flow. There was a competition thread as well as the key customer also reduced its growth guidance. So, and the stock was also hammered. So at this point in time, do you find it attractive bet to enter into PI Industries, and what's the outlook?
See, the company is good. No doubt on that. The numbers have been good. They have been concerned about consolidating that chemical, which some reports came that that would be a problem, and that stock got hammered. Still, I think there is some more downside left. Around 3,000, I would say it would be a safe level to buy.
Next one is coming for you, Kunal, from Narsimha Rao. He's writing to us from Hyderabad. And he wants to know about Sandur Manganese, if he can buy currently this particular counter for a period of a year. And also he wants a support level for Patel Engineering.
So I think Patel was one of the calls which I had flagged off, and I would believe 60 approximately is a good support point for the stock price. But then, because it's a high beta stock, you have to have those risk appetites at place. But the chart patterns over the last 1 month has been very positive for the stock. So broadly, my sense is that the stock should get into a breakout pretty soon, if not late. Sandur Manganese, on the other hand, I think, if I'm not wrong, the stock is placed at 2,600 plus levels. Excellent momentum in the last, I think, 5-7 days for the stock, where it's moved from 1,600 to now 2,600 plus. So it's a bit late into buying the stock because the indicators are a bit overbought. Wait out for a correction to at least 2,200, 2,300 range. That could be a good starting point for you.
Welcome back to Buy Now, Sell Now, and having a look at the markets. The markets are seen to be coming back into the green. That's Nifty 50. That's once again seen to be climbing back in the green with gains of almost 8 or 9 odd points as of now. And even Bank Nifty in few moments from now can turn into green. And that's the FMCG pack which is leading, wherein Nestle, Tata Consumers are seen to be leading from the front. And even Reliance Industries is up around 1.8% and definitely supporting the market move. But that's about markets. But let's get back to all your stock related queries then. And Rajesh, the next query that I have is coming from Neetu from Vijayawada, and she's holding shares of SH Kelkar, 3,000 in quantity at a price of 163. That's the one stock that she's holding. And she also has Tejas Network, 5,000 from a price of 885 rupees. What's the outlook in both of these?
Hold for both of them. Both are doing very well. Numbers have been quite satisfactory, I would say, and the prospects are very high as far as
IFB
SS
Infra.
Kelkar is
IFB Agro,
concerned.
sorry.
As far as SS Kelkar is concerned, I think this stock can give around 20-25% upside in the next 12 to 18 months, although the volumes are very low in this counter, but one can continue to with this stock. As far as Tejas is concerned, I think some amount of profit booking is warranted in the next 5-6% upside, and then you can continue with the rest of them. Maybe around 900 odd rupees, one can book part profit.
All right, next one is for you, Kunal, coming in from Praveen Kumar, writing to us from Kerala, and he has IFB Agro, 100 shares at an average price of 540 rupees per share. He's holding this counter for a year or so. Now he wants to know about the short term. Should he add some more at the levels, or should he just exit this counter? And if you exit, is there any other suggestions that you can give which stock he can look to buy?
Yeah, I think you can look to exit the stock. It's been an underperformer, low liquid name for IFB Agro, and hasn't participated at all in the last 6-8 months of this very strong market uptrend. So I would suggest an exit and shift back to large cap names. I think you can still consider Reliance Industries, HDFC Bank, ICICI Bank at current levels.
Okay, Rajesh, what's your advice on LIC as of now? Saroja is holding the shares from a price of 615 rupees. She is sitting at good profits. At this point in time, would you advise to book out profits or continue to ride the momentum in LIC?
In fact, we have a buy on LIC. With 66% market share, AUM higher than the entire mutual funds AUM, launching new products, I think it's one of the best play in the insurance sector. Yes, it has underperformed since IPO, but at this point of time, I think it's time one can have a look on LIC, and for a time horizon of maybe 12 to 18 months, I won't be surprised if it goes to 900 odd rupees.
Right. This one's come from Rita from Kolkata. This one's for you, Rajesh. Given the fact that the optimistic or positive outlook coming in from the Railway Ministry, Rita has done an SIP in IRFC, Texmaco, Titagar, Railtel, RVNL, as well as Jupiter Wagons. I think there are very few stocks that she's left out in that SIP. Now she wants to know whether she should actually continue with this railway basket stocks of SIP for the next 3 years, or is there any other specific company that she should add on to this?
See, 3 years for this railway story, I think it's a very long period of time. A lot of things might happen in between. You have to keep track of every news flow, government policies and other things. They have already run up quite a lot, and some of them have become very risky. So you should be very cautious at this point of time. Everything is looking very good. You can continue with that. But I would again say keep track of every news flows, numbers, economic policies and all. And as far as valuations are concerned, I think at this point of time, Texmaco Rail, Texmaco Infra, which is a holding company of Texmaco Rail, and IRCTC, they are into a sweet spot because they have not run up that much where the peers have run up.
Okay, the next query that I have, Kunal, is coming on Sonata Software. Shrikant is holding 500 shares from a price of 750 rupees. Wants a 3 months target on this particular counter.
Well, I think the stock is going through a bit of consolidation, a patchy volume for the stock in the last couple of days. I think from 700 it's moved to 800, but then the volumes as well as the price momentum is not in sync, which means that possibly the stock may get into a pause at higher levels. So I think 800 to 825 probably could be a near-term target which you can keep for the stock.
Alright, Kunal, another one coming your way from Basab Datta Sarkar, and he wants to know about HAL. He already has 100 shares at a price of 2,675 rupees per share. He wants to know whether he should go ahead and book profits currently, or should he actually add some more of the counter to his portfolio. He's a long-term investor.
So I would not suggest an add over here, but yeah, you can continue to hold on. I think the near-term targets which I would probably keep for HL would be in the tune of 3,000 plus.
Okay, but with this, viewers, let's move on and kickstart taking all your queries in the rapid fire session. And the first query is for you, Rajesh. Gayatri is holding 300 shares of NMDC from a price of 196 rupees. Any targets in this one?
Continue to hold, maybe 220, 225 for the medium term would be a decent target.
Alright, Kunal, this one is coming from Sitaram Ganesh, and he already has IRB Infra, and thanks to you, he's saying it's already reached his target. Now he wants to exit this counter. Which other stock can he look to buy?
So I think I recommended few names. Hindustan Copper could be one of the stocks which you can look out for.
Rajesh, any targets on Zomato? Parish is holding shares from a price of 110 rupees. Is that a hold or sell at this point?
140, 145 would be a decent target in the medium term, and wait for numbers to come in.
Kunal, Vishal from Nagpur wants to know about IRCTC. Should he continue to hold or exit? I believe he's already is sitting on good profit.
So I think closer to 980 could be a positional target if you can hold on to it for another, say, couple of weeks.
Okay, Kunal, Amit Mishra is holding shares of Balrampur Chini at an average price of 436 rupees. Average hold or exit?
I would suggest just a hold on Balrampur Chini as of now.
Another one, Kunal, Nestle is the stock. 12,000 is the buy price for Vivek. Time to book out of the stock, or should he actually look for a higher target for Nestle?
Yeah, you can keep a higher target of almost 26,000 approximately for the stock.
Okay, Rajesh, any take on Indiago's housing, wherein Atul has bought 340 shares at a price of 226, and after 1 year, the stock is back to its cost price. Good to hold or book out of this one?
See, with the change in management and all the news flow coming in, I think there is some upside left in the stock. Continue to hold.
Alright, our viewer Sanjay Kumar wants to buy Sula Vineyard. Do you think that a price of 472 would be a good price to go ahead and buy this particular counter right now? So, Rajesh?
Yes, for a longer term, one can go ahead and buy.
Okay, but with this, viewers, we are completely out of time in this edition of Buy Now Sell Now, as well as in the rapid fire session. Thank you so much, Kunal and Rajesh, for joining us today and helping all our viewers resolve their stock related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put the show together. Thank you so much for watching, but don't go anywhere. Markets at noon will take the action.